Hey everyone, and welcome back to The Explainer. Let's get right into it, shall we? Today, we're unpacking the polarizing Q1 2026 financial report from KBC, or Kinh Bac City Development Holding Corporation. Now, if you follow Vietnam's industrial real estate sector, you already know KBC is an absolute giant. But right now, well, they are performing a seriously fascinating balancing act. On one hand, we've got aggressive expansion plans designed to capture massive foreign investment. But on the other hand, there are some very real questions popping up about capital allocation, liquidity risks, and a balance sheet that is looking pretty heavy these days. We're going to use the latest data from VP Bank, Yuana Research, and BSC to break down what's actually happening behind the numbers. Right out of the gate, look at this number. KBC's first quarter revenue dropped by a shocking 56.2% year over year, coming in at just 1,336 billion VND. And it gets rougher. Their net profit took an even harder hit, plummeting 72% to just 234 billion VND. Honestly, if you only looked at the top line, you'd probably think the sky was falling. But hold on a second, let's flip the script. Despite that massive revenue crash, their gross profit margin paradoxically skyrocketed to 48.6%. That is up nearly 10 percentage points from the exact same period last year. So the big question is, how does a company lose half its revenue but see its profitability metrics shoot straight up? That is exactly what we're going to figure out today. Here's our roadmap. First, the revenue and margin mystery. Second, the inventory and debt burden. Third, a major project checkup. Fourth, the dividend debate. Fifth, foreign investment catalysts. And finally, number 6, valuation and returns. All right, let's kick things off with Section 1, the revenue and margin mystery. So the real trick here is understanding the base effect. Think back to Q1 of last year. KBC handed over a massive 90 hectares of industrial land, mostly in Hong Yen. That land had a pretty standard profit margin of about 42%. Now fast forward to this year, they only handed over 14.8 hectares. So, yep, there's your 56% revenue drop. But, and this is the huge but, the land they did hand over this year was insanely lucrative. According to VP Bank's analysis, the 9.8 hectares they handed over at the Nam Son Hapling project carry a massive estimated gross margin of 70%. Throw in the initial handovers at Quavo 2, and this deliberate shift toward premium, high-margin projects is what drove that overall margin spike up to 48.6%. Basically, in this quarter, quality completely padded the drop in quantity. Moving right along to Section 2, inventory and debt burden. Okay, the sheer scale of capital KBC has locked up right now is honestly staggering. Their inventory just hit a historical record of 29.5 trillion VND. That's up 9% just since the start of the year, and it now makes up 41% of their entire total assets. So where exactly is all this money going? Well, they've poured 650 billion into the Changat urban area, another 550 billion into Quavo 2, and notably 600 billion into the Trump International Project. These guys are making some massive, very long-term capital allocations. Just look at this single mega project, Trung Cat. It accounts for 17 trillion VND. That is literally 59% of KBC's total inventory, tied up in one place. But when you look at it from above, operations are currently completely stalled at the sand filling and land reclamation stage. It's basically a mountain of stalled capital that isn't generating any cash flows yet. And as you might guess, all that stalled capital comes with some pretty severe liquidity risks. To fund these massive expansions, KBC's total debt has crossed 30 trillion VND. And because of this changing debt structure, their Q1 interest expenses absolutely ballooned, going from 103 billion VND last year to 263 billion VND this year. Guys, that's a 155% jump. When your revenue drops and your interest expenses more than double, that heavy debt load just aggressively eats right into your net profit. Which brings us to Section 3, a major project checkup. So when does all this actually turn into cash? Well, BSC Research gives us a really helpful projected delivery timeline here. It shows that KBC's operating leverage is heavily dependent on the back half of this year and next year. For late 2026, the focus is all about accelerating infrastructure and handing over land at Quavo 2 and Nam Son Hapling to major tech clients. By 2027, the Phu Industrial Park in Taiyuan should finish land clearance and start its own infrastructure. And what about that massive Trung Cat project we just looked at? Well, BSC is actually applying a 20% discount to its valuation right now because the timeline is slipping. The ultimate hope there is a wholesale transaction down the line, but it certainly won't be rescuing the 2026 balance sheet. Next up, Section 4, the dividend debate. And oh boy, is it a debate. So KBC's management has optimistically promised a 20% cash dividend for 2026. That's 2,000 VND per share, which means they'd have to pay out roughly 1.9 trillion VND. Management seems pretty confident they can fund this by unlocking cash from residential real estate sales. But on the flip side, analysts at Yonta Research are incredibly cautious about this. They point out that KBC has 2 trillion VND of debt maturing this year alone, a really high debt-to-equity ratio of 107%, and an estimated capital expenditure need of over 10 trillion VND just to keep their projects moving. Yonta is essentially asking, are you sure about paying out cash when you're this thirsty for development capital? And if we look at the historical precedent, well, it's pretty telling. Yuanta's data tracking KBC's ambitious targets versus their actual results reveals a stark gap. Look at this. KBC has missed its revenue and profit targets for 6 consecutive years. In 2025, they only hit 67% of their revenue target. This historical track record heavily validates why analysts are so deeply skeptical about management's rosy cash flow projections for 2026. Let's shift gears to some of the really bright spots in Section 5, Foreign Direct Investment Catalysts. Check out this map. According to BSC's reporting on the Laoke to Hanoi to Haiphong Railway project, major infrastructure developments are mapping perfectly onto KBC's massive northern land bank. With China significantly increasing its foreign direct investment into Vietnam, provinces like Bac Ninh, Haiphong, and Taiwan, where KBC has primed all its industrial parks, are becoming the ultimate targets for foreign capital. And we are not just talking about hypothetical investors here, we're talking about heavy-hitting tech suppliers. KBC has already signed memorandums of understanding for 96 hectares with Luxshare. They're a vital part of the Apple supply chain, targeting the Queva 2 expansion. GoTech is lined up for Namsun Hompling, and Hisong Electronic is targeting Trangdui 3. BSE views these surging Chinese and Korean capital inflows as the ultimate catalyst for KBC. Basically, if KBC can get the infrastructure built, the Eagles are absolutely ready to land. Finally, let's bring it all home with Section 6, Valuation and Potential Returns. So, despite the heavy debt burden, the delayed residential projects, and the cautious outlook on dividends, the market has actually priced a lot of this risk in already. Currently, KBC is trading at a price-to-book ratio of 1.3 times. To put that into perspective, this is well below its 5-year historical average of 1.4 times. Fundamentally, it's cheap relative to the massive land assets it holds. And because of this cheap valuation against that incredible long-term potential we just talked about, both domestic and foreign institutions still see double-digit upside. VP Bank maintains their target for a 13.5% upside based on steady handovers. BSC sees a 21% upside. And here is the wildest paradox. Yuana, despite all their severe caution on the dividend and tight cash flow, actually upgraded KBC to a buy rating. They cite a 24% upside strictly based on how attractive the current valuation is relative to those long-term operations. So, we are left with a truly fascinating scenario. KBC possesses some of the most sought-after industrial real estate in Vietnam, right as a historic wave of foreign investment is rolling in. Yet on the flip side, they're carrying a record 29.5 trillion VND in inventory and burning massive amounts of cash on interest just to keep the lights on. Will KBC successfully walk this tightrope of expansion and unlock the value of these mega projects? Or will that heavy balance sheet pull them down before the major operating leverage even kicks in? It is a high-stakes balancing act in capital allocation, and definitely one we're going to keep watching closely. Thank you so much for joining me on this explainer, and keep learning.